Time now for Earnings Exchange, the return for this earnings season. We give you the action, the story, and the trade on three names set to report before the opening bell tomorrow morning. It's actually technically four today because we're going to start with a pair of big banks, JP Morgan and Morgan Stanley. One serves retail investor, the other more institutional, but they're both down 20% this year as recession fears grow and volatility grips the stock market. JPM has fallen after four straight reports. Morgan Stanley has actually risen on three of its last four. Our own Leslie Picker has the story on both banks for us. And Chris Grisanti is here today. He's MAI Capital Senior Portfolio Manager, and he has our stock picks and trades. Welcome to both of you. Leslie, let's hear the deets, so to speak.
So, Kelly, you kind of alluded to this, but Wall Street's been cutting estimates for these two firms over the past few weeks or so, and now the consensus is for a 24% decline in 2Q EPS for JP Morgan and a 17% decline for Morgan Stanley. Top line for each also expected to shrink. For JP Morgan in particular, investors will be focused on any recession-related commentary from CEO Jamie Dimon. A month ago, if you recall, it's kind of hard to forget, he said that we should be bracing ourselves for an economic hurricane. And he has changed, so the question investors will be asking is whether he has changed that weather forecast. Is he upgrading it to a Category 5 storm, downgrading it maybe to just a little sprinkle? We'll see. Relatedly, Dimon has said he plans to be conservative with the balance sheet. And as such, JP Morgan was the only major firm to add to its reserves last quarter. Will they continue to do so again in Q2? Investors in Morgan Stanley will be looking out for any visibility into the M&A outlook. The firm is expected to see revenue dip thanks in part to a slump in investment banking fees. They'll also be looking into how trading has translated into revenue during the quarter and whether the volatility that we've seen actually helped boost that top line, maybe even to offset a little bit of the decline that they saw in investment banking.
All right, so let's put the question to Mr. Grisanti. Do you like one, the other, both, or neither of them?
Kelly, it's nice to be with you again. I really don't like either of them here. I think they're fine companies. JP Morgan in particular is best in class. I just don't want to be in this class at this time. I think if there is a recession coming, and I think that's probably more likely than not, we're in the early innings, and you just don't want to own the financials. Having said that, I think both of these companies beat tomorrow, and if there's strength on the beats, I would be a seller on that stuff.
We talked, Chris, in the past about the home builders, for instance, where you thought, look, maybe there's some opportunity. They're cheap enough. Why wouldn't the same approach apply to these banks at their valuation levels?
Because they're just not as cheap as the home builders. The home builders are really at 10-year lows on both earnings and price to book. JP Morgan is a little cheaper than average, but not much, and it's certainly not cheap if we're going into a recession. Morgan Stanley is actually a little more expensive than its 10-year average on both metrics. Even though both stocks are down, they're down from some pretty lofty highs, and I'd still take a pass at this point. I'm not going to argue with Jamie Dimon, and if there's bad weather coming, I don't want to be holding the stock.
Right. He's kind of making the case for not holding it. And listen, he's candid. That's what he does. But Leslie, JP Morgan has set the tone not only because they're chronologically first, but many of his comments about the outlook and even the expense issues they face turn of the year.
Yep, the expense issues expected to still be there across Wall Street. And that's something that investors are also clued into, just given the fact that we have seen such large wage inflation, especially among junior bankers. They're expecting to be paid a lot more. And then just the overall travel costs. You've got senior bankers traveling to see clients again, going to conferences. They're on the road. All of those things factor into expenses. So that's something that people will be looking at as well, just in terms of how banks are faring with the overall inflation picture.
A lot will rest, just like you said, on what he says and how they do. Leslie, we appreciate it. Let's turn to Conagra Brands now. They make Slim Jims and Duncan Hines products, and they're actually outpacing the averages, up 5% this year. But inflation did just hit a new 40-year high. The shares have dropped on 3 of the last 4 reports. Dominic Chu has the story on this one. What do you think, Dom?
All right, so over the last year, Conagra has been on a bit of a roller coaster ride, but relative to other stocks in the market, it's been pretty tame. It's been range-bound on the downside at $30 a share, $37 on the upside. So, yeah, pretty calm by some other standards. Now, on a year-to-date basis, the food processor, you mentioned kind of the Duncan Hines and Slim Jim assets. It's also Bird's Eye Frozen Foods. It's Hunt's Ketchup. It's Pam Cooking Sprays, Healthy Choice, Ready Whipped Cream. I mean, that stock is up 5%. Up 5%. That's pretty good compared to the 20% drop in the S&P. The earnings are expected to be coming in at just around 63 cents a share, revenues of just around $2.93 billion. But this is very much about the inflation story, right? And also the recession possibilities that you guys just spoke about. The stock has been an outperformer because of the nature of its business. It's viewed as recession-proof, right? People have to eat. They have to spend money on food no matter what the economic condition is. But the inflation picture now is what's weighing on investor minds. Questions still remain. Conagra, can it raise prices to offset some of the cost pressures it has? Can it pass those to consumers? Will profit margins be hurt by that? They're going to be a big focus, Kelly. Analysts and investors will be paying very close attention, for sure, to what Conagra says about the outlook in those coming months. So inflation, recession, all part of the story here.
All right, Dom, thank you. Chris, I wouldn't take you as a Conagra guy, but maybe you'll surprise me.
Sure. No, I'm not in this case. And I think this is kind of the opposite of the JP Morgan Stanley, where expectations are so low that they could have a nice beat tomorrow, even though I don't love them long term at this point. But Conagra, on the other hand, folks are remembering Pepsi from yesterday that had real strong numbers. And they were, because they were able to pass costs along and raise prices nicely. I think Conagra doesn't have the kind of brand that will, for the most part, allow them to be price setters. So I'm a little afraid folks are too optimistic on Conagra that the costs will hit them, but the pricing won't be as strong as maybe some other folks with stronger brands. So I'd be a little cautious on Conagra. And just like Dom said, I'd particularly focus on the commentary on the call that talks about costs and their ability to pass them on.
Yeah, still trading above a 14 forward PE, so not that cheap. All right, let's move along to our final name here in the bellwether semi space as well. Taiwan Semi has fallen 32% this year, and it's 44% off the highs. The entire chip sector has gotten dragged, of course. Christina Partsenevelis has the story. What are you watching, Christina?
Well, we're going into this earnings report knowing that Taiwan Semiconductor already posted better than expected quarterly revenue in Q2 because that came out last Friday. So that's alleviating maybe some fears. But there are some concerns, of course, of a cyclical downturn. But this foundry in particular, which pretty much makes the most advanced silicon chips, is expected to hold up. And I say this because there's a few positive catalysts. You got Apple's chip ramp. That means more business for Taiwan Semiconductor. You have Intel CPUs. That means more demand for Taiwan's more advanced nodes. And then lastly, you've got NVIDIA and Qualcomm that are moving their wafers back over to Taiwan Semiconductor. So all in all, customers don't really want to lose their spot at this particular foundry. There are some concerns, of course. It's not all rosy. You've got inventory buildup. Micron spoke about this. You know, if customers already have the chips in store, they're paying for the inventory, why would they buy more? Then you have crypto mining that has plunged, and that's decreased demand for graphics chips. We've seen that in the drop in GPU prices. And lastly, Taiwan Semiconductor has warned that the costs associated specifically with building its fab in the United States are much more than they originally anticipated. So overall, will demand hold up enough for TSMC to reiterate its 30% revenue growth for 2022? That's a big question that I'll be looking for once I see this report out tomorrow morning, 2 a.m. Eastern time.
Wow. Yeah. Tell Christina, are you going to be up at 2 a.m. waiting for this to cross?
If all our bosses are watching right now, the answer is yes. If it's just me and you, the answer is no, Kelly.
Well, I know Chris Grisanti will be up waiting for these to cross. Chris, what do you do with the stock and the sector?
First of all, I have a feeling Christina will go far in this business. But I think Taiwan Semi is like the Michelangelo of semiconductor making. There is nobody better at creating the cutting edge, best, highest use semiconductors in Taiwan Semi now. Samsung's a close second, but even they can't do it. So while business will certainly slow, I like this company a lot better than the cyclically impaired JP Morgan and Morgan Stanley. So Taiwan Semi, while you might not need a mortgage from JP Morgan next year, you're going to need a semiconductor that only they can make if you're going to use an iPad or something like that. So I think Christina is exactly right. The question is, will they cut guidance? I think there's a good chance they will. If the stock's down on that, I would be a buyer. So that's my one stock today that I'd be interested in buying on weakness.
All right, we will leave it there then, and we very much appreciate it. Christina, thank you. Chris Grisanti, thank you as well for all of your picks.